Good morning again, everyone and committee. This is the Taxation, Finance, and Economic Development Committee, and we're having our second virtual hearing on Bill number 20-0593, tax sales, properties exempt from sale for the purpose of directing the Director of Finance to withhold certain properties from tax sale, defining certain terms, requiring that the Director of Finance adopt regulations to implement the requirements of this section, requiring that the Director of Finance submit an annual report to the Mayor and City Council, and generally implementing the authority provided by Section 14-811F of the State Tax Property Article. This bill was introduced on August 17th, 2020. This bill was sponsored by Councilmember Danielle McCray of the 2nd District, and we'll first hear comments from the sponsor of the bill. Danielle McCray, you're on.
Thank you, Madam Chair, and thank you to the members of the committee. This bill directs the Director of Finance to withhold properties of homeowners who are low income, homeowners who are at least 65 years old, or homeowners who are disabled from tax sale. And just thinking about the communities that I represent, like Frankfurt, East Rosemont, Bel Air, Addison, there are many households that are under a heightened financial strain due to COVID-19. And it is important to me that we use every tool that we have to protect our most vulnerable residents. Oftentimes we talk about what we can't do at the city level, and this is something that we can do. We are enabled to do it, and we should lead on this issue. Thank you so much.
Thank you. And as we continue to try to make the city more equitable as we move along, I just thank you again for introducing this bill. I think it's a good start in us moving in that direction. So on that note, I'd like to first hear, I guess, from the Law Department. Ellen DePietro, Mr. Pietro. Elena, I'm sorry.
Elena DePietro from the Law Department. How are you doing this morning, Councilwoman?
Fine.
Hello? The Law Department has reviewed the bill, and we, in conjunction with our review, we also reviewed the state enabling legislation and determined that.
Elena, I think we lost.
Here.
Okay. You might have to start over.
We lost my computer around to see if that helps.
Okay. We're having trouble with her. Hello, can you hear me? What we're going to do, we'll go back and see if she can get it together, and we'll go with housing. Stephanie Murdoch.
Yes, good morning, Madam Chair and members of the committee. Stephanie Murdoch, Legislative Liaison to the Department of Housing and Community Development. I'm here today to discuss City Council Bill 20-0593, tax sale properties exempt from sale. DHCD supports the sponsor's objectives to protect legacy homeowners and preserve stable communities. I'm joined here today by Mike O'Leary of DHCD's Office of Homeownership and Neighborhood Preservation. Mr. O'Leary manages the Tax Sale Coordination and Prevention Services Program, which assists homeowners in avoiding tax sale and in understanding the tax sale process. By promoting tax sale clinics, conducting community-based information sessions, and connecting homeowners with additional resources such as city and state tax credits. Mr. O'Leary also works with city council members and staff, city agencies, nonprofit organizations, and neighborhood-based groups to provide training on the tax sale process and connect them with prevention resources. I'm going to turn it over to Mr. O'Leary to discuss in more depth the resources and trainings the program provides those at risk of tax sale.
Good morning, Madam Chair, members of the
Good morning.
committee. My name is Michael O'Leary. I am the Tax Sale Services Coordinator for the Housing Department's Division of Home Ownership and Housing Preservation. I've held this position since 2015, and I am primarily responsible for increasing understanding and awareness among city residents, primarily low-income homeowners, of tax sale, what it is, how, why, and when it happens, how to avoid it, with the aim of reducing the numbers of our most vulnerable residents who experience it. And I do this by providing resources and training, as Stephanie was saying, directly and indirectly to those at tax sale risk, for example, those receiving final bill and legal notices, and to vulnerable position populations at large, such as aging adults, and concentrating in those areas of the city with high numbers of homeowners who receive final bill and legal notices in consecutive years. And I provide the resources and training to and through city agencies, council offices, legal advocacy groups, housing advocacy groups, community and neighborhood-based groups. And I would say that I conservatively touch 3,000 to 4,000 residents a year doing this, and that's conservatively. One of the most efficient ways that I contact people is by joining forces with the health department's Division of Aging and Care Services and their annual mailing out to people who have owned and lived in their homes at least 25 years who are on the final bill and legal notice. I attach or include a resource page for them with my contact information. And judging by the number of calls that I get after that, I would say it's quite successful at reaching people. I also, send the council members, people that are on that list, both the 25-year homeowners and all the homeowners. I promote the tax sale clinics that are put on every year by Pro Bono Resources. And there are 4 of those around the city in the spring every year, put on by PBRC and Maryland Volunteer Lawyer Service. And as Stephanie was saying, I do a lot to promote the homeowners and homestead tax credits, and to be sure that people are eligible, to be sure that they have the names on their deeds to their houses. We partner with a Maryland Volunteer Lawyer Services program called My Home, My Deed, which actually pairs a lawyer with income eligible, quote unquote, homeowners who don't yet have their name on the deeds to their home. These are just some of the things I do. I train every year, the 211 outreach, outcall people. I train the MAPS people at the health department. I train the library resource officers, and geez, a whole host of others. It's a long list of them. So that's what I do. And I'm always bring inquiries from the council, so I feel like I know quite a few of you pretty well at this point. And I'm here to answer any questions you might have.
Any
Thank you.
questions?
Thank you, Michael. I just wanted to add that DHCD is standing by our report, no objection.
Thank you. And we also have a letter of no objection from we have your letter as well. Thank you. I want to go back to the law department. Ms. DePietro, are you available?
I am here. Can you hear me clearly this time?
Yes.
Okay, I'm sorry about that. I don't know what happened. I'm going to keep my video off because that sometimes helps.
Okay.
The law department has reviewed the bill for form and legal sufficiency and reviewed the state enabling legislation that allows the council to enact this law, and have determined that it is consistent with the enabling legislation. The legislation is fairly broad in the ability it gives the city to enact eligibility requirements for homeowners who would be eligible to have their properties removed from tax sale. So other than the definitions of, I think it's homeowner and dwelling, there are no other definitions in the bill. So it's fairly wide open for city regulation as long as it's consistent with the rest of the tax sale code.
Okay.
So the law department does approve it for form and legal sufficiency.
Thank you so much for your testimony. And now we'll hear from the finance department.
Good morning, Chairwoman Middleton, honorable members of the committee, and the council. My name is Henry Raymond, Director of Finance for the city. I'll give some high-level remarks, and then I'll turn over to Bob, the Budget Director, to get into some of the specific financial issues. So first, I'd like to state that the Finance Department supports protecting vulnerable owners of occupied properties. I'll give some examples of some of the things we have done. The Finance Department successfully led efforts to increase the tax sale threshold from $250 to $750 for owner-occupied properties. We introduced legislation and obtained approval to reduce the redemption rate of interest from 18% to 12% for owner-occupied properties. We also had the time frame extended for owner-occupied properties, nearly double, from 4 months to 7 months before legal fees could be added to the redemption amount. You just heard from Mr. Michael O'Leary at HCD. I'd like to commend him for the services that he's performing. The position that he's in was recommended for creation by the Finance Department in 2015, part of the Finance Department's tax sale reform efforts to try to assist financially vulnerable senior citizens. Now, as you are aware, the rainy day fund is going to be required to balance the fiscal year that just ended June 30. Also, the current year budget required the write-down of over $100 million of revenue, and layoffs were required. I have two issues with the present format of this legislation. One, it will result in the loss of revenue, and two, represent new increased operating costs to implement and administer the legislation if approved in this format. I'll ask Bob Sinemy to provide more information regarding this.
Thank you.
Thank you, Henry. Thank you, Henry. This is Bob Sinemy, Budget Director, and I just wanted to talk in a little bit more detail about some of the financial concerns and some of the statistics that we looked at for this particular program. I'm sorry, can folks hear me?
Yes.
Okay. So I think first things first, the tax sale as a whole generates in any year between about $8 million and $15 million. And that equates to about 1 to 2% of our property tax revenue. So that last enforcement mechanism is a push to kind of collect those last dollars of property tax revenue. There's about 12,000 properties each year that go to tax sale. That's an average of the last 2 years, and 46% of them roughly are what we call mayor and city council properties, where we own them already and some of the liens accumulate. Only 54% of them are privately owned properties. The reason we like tax sale and we're not wild about blanket exemptions from tax sale is, again, that tax sale is, an enforcement mechanism to have people pay. We went back and looked at our property tax revenue last year, and 35% of the tax revenue gets collected after the first delinquent notice goes out. So if we did not have an enforcement mechanism, we are concerned that you could lose a significant amount of property tax revenue not having people pay. The other thing we want to mention, of course, is that there are other either credits or programs in place that do assist the folks that we're trying to target here. So one example of that, of course, is the state taxpayer homeowners tax credit, and then the city has what we call the supplemental homeowners tax credit that attaches to that targets low-income seniors to give them a break on their taxes. And what we've seen is that in some cases, that tax credit actually reduces the tax liability for those folks, sometimes all the way down to zero. And so there are programs in place to assist those folks. We also, of course, heard from HCD about the methods and the actions that they take to try to protect people that get to this phase of the process. So we ran the numbers on the tax sale from last year, and we looked at the number of people that pay taxes and the value of the taxes that are paid by people in this category. And what we found is that, based on a very rough analysis, if you look at our bill report, that we would have $13.7 million of tax revenue at risk if we were to have a blanket exception for these criteria. Now, that doesn't mean that all the people that are exempt are not going to pay their taxes. People pay their taxes because they're good citizens and they want to do the right thing. But our concern with a blanket exemption like this is that it sends a message to folks that they don't have to pay, and it puts us in an increasing amount of financial risk. And when we look through the data, we have these other programs in place that really reduce the tax liability for some of the folks that we're trying to protect. And we have the programs in place that Henry described and that HCDC described to try to assist people as best we can. On top of just the financial concerns, there are some implementation challenges as well. The criteria in this bill, we would greatly appreciate having more time or a work session to go through some of the components of the implementation. Some of those things are not exactly consistent with current law. Some of them might require finance to check additional criteria that we can't capture today. And so I think it's worth further conversations on that to figure out how that would be managed and implemented. We don't necessarily want to have a more criteria that we have to check for in tax sale. We would rather make those criteria consistent with either state or local law that's already in place. So I guess to summarize our points again, like Henry said, we've worked very hard to try to make sure that we protect as many people as we can. And we're not wild about these blanket exemptions because that does send a message that people do not have to pay. And there are some potential unintended consequences there and the potential impact on city property tax revenue. So we can pause there, and folks have any other questions, we're happy to answer those.
The committee, you have any questions, or Councilwoman McCray?
Yes, thank you, Madam Chair. I do have a few questions. So first, I want to mention that this is not a blanket, as you know, it's not a blanket exemption of tax sale properties. So when you mentioned the 8 to 15, for my first question, when you mentioned the $8 to $15 million of tax revenue, you're talking about all properties, is that correct? Vacant properties, commercial properties, and also the small subset that I'm looking to exempt, is that correct?
Yes, that is correct. And it is about 1 to 2% of property tax revenues get collected ultimately by tax sale each year. And yes, it's all properties. We're talking about everything, residential, commercial, et cetera. But just wanted to illustrate that mechanism, that tax sale mechanism, is the enforcement piece that makes sure that people finally pay those items.
Thank you, Director. So what I do want to note is I'm referencing a very small subset. The total that you provided, the $18 to $15 million estimate, would include vacant properties. It would include commercial properties. It would include actually all homeowner occupied properties. And I just want to make it clear that what I am referencing is our vulnerable residents, which you guys state that you are in favor of the intent. And the vulnerable residents are 65 years or older, low income, and also disabled within my bill. So that would not be the entire $8 to $15 million budget. So I just want to make that clear to the committee members for anyone listening. And my second question would be regarding the operating costs. I believe that was the second point from Director Raymond. Can you speak and or provide an estimate of how much the operating costs would be to implement the program? What numbers have you run?
Yeah, this is Henry Raymond. I'll address that. Due to the short time we've had to respond to the bill, we have not prepared what the operating costs will be, but we will do that. Part of the challenge that we have is the criteria of the bill. We don't have the demographic data. So, for example, we don't know who is 65 that's in the property, that they've been in there 3 years. We don't know what their gross income is or what we would have to do to get it. If the bill passes as it is, my thought is we are going to have to hire additional staff because staff is going to be required to review the income data, the disability information, review age criteria, et cetera, as well as the automation that will be required. So we will put that together, but those are some of the challenges that the bill poses based on the present criteria.
Okay.
Thank you, Director Raymond.
You're welcome.
President, I'm sorry, Vice President and Madam Chair, I do have a few additional questions, but I do want to be respectful. And if I see Councilman Stokes has a few questions as well, so I'll defer for now.
Okay. Councilman Stokes, you're on.
I truly support this. I think it's a great bill. My question is, and I was listening to what Finance Director Mr. Raymond said, with those mechanisms not in place, do that open up the door for fraud? Because you don't know what the income is, you don't know how long they've been in their house. And I think it's a great bill, but that is my question to Mr. Sinema or Director of Finance, Mr. Henry Raymond.
Yeah, Councilman Stokes, I'll address it, but you broke up a little bit at the end. So specifically, what was the question? Yeah.
I said what you said was not in place. The person, how long they've been there, the income level, how old they are. About that in this bill, do that open up the door for fraud in terms of people taking advantage because those other pieces are not?
Well, I would say, yes, there is the opportunity for fraud, but if we were to implement the bill as it's presently written, we would put in the appropriate internal control to mitigate the risk of fraud. That was where I was indicating we would have to hire additional staff to review income tax returns, to review HIPAA disability information, to review the age of the applicants, and to determine if they've been in their properties for the appropriate time frame, the 3 years. That would be required, and that's what would be generating the operating expenses. So I hope I've answered that.
Yes, thank you. Thank you, Madam Chair.
Yeah. I guess I just want to make a statement at this time that I just think that this bill has come at a very important time, especially through COVID and people losing jobs. And, we do have statistics right here in Baltimore where we have a very strong senior population, and a number of seniors live in these distressed neighborhoods because of, they got their home, they retired there, they've been in these homes for 40, 50 or more years. They are a vulnerable population, and as we're trying to enforce equity and just trying to help our citizens as much as we can, we have to find ways in helping seniors that have worked long and hard in, right here in the city. We're talking about retired city employees as well. So I just think this is a, excuse me, good time to really try to work together and get this bill moving. I understand that the committee, we need to consider if we should have at least one work session to kind of iron out some of the questions that the finance department has, so it can be a smooth going bill. On that note, any questions from the committee? So what we'll do at this point, we do have some people that have their hands raised for, before we get to the attendees with their hands raised, I think I saw Vice Chair McCray, you had a statement and another question?
I actually have just one more question, Madam Chair. Thank you so much. Director Sinema, you did speak about scenario 2, which would be the worst case scenario. And I just want to hear more about scenario 1 that's presented within the report, where that annual impact is $100,000. Just based off of the report, from what it's saying, the first scenario reflects the homeowners who entered the 2018 and 2019 tax sale processes and would qualify to be removed from the process under this legislation. So again, you spoke about scenario number 2. Can you just provide us more information about scenario number 1, where it's stating that the annual impact is just roughly over $100,000?
Sure. So I can clarify that. So the lower value, the 100,000, we looked at the people that actually made it in all the way to tax sale and the liens were sold. So, and it's very small for this particular subset. And again, the reason for that, I think, is that we have tax credits in place that are targeted to this particular population. And we also have a pretty robust process to try to help and identify people that get to that point in the process. And so that scenario, what that is telling us is that the people that actually go through to tax sale and actually do, have a private investor purchase those liens is actually pretty small for this particular subset of the population. The higher scenario, and that's a good thing, of course, that's what we're trying to accomplish. What we're trying to show by the higher scenario is that if you take the original property tax bill that goes out, if you just take the subset of the people that are affected by this bill, you're exposing $13.7 million of property tax revenue that gets paid today somehow because, and part of that is because of the enforcement mechanism of tax sale. And what you're saying is that anybody that's in that category doesn't have to pay those bills. And as I stated earlier, some of those people are going to pay. People pay their tax bills because it's the right thing to do and they're responsible people. But the risk when you introduce something like this is that by exempting whole classes or whole categories, you could have people that don't pay. And the data, at least that we've seen so far, is that these people do pay and that there's very few people that actually get all the way through the cracks and get to tax sale. And, I think that's a credit to some of the work that the city's tried to do over time. I think some of that's, due to the improvements that were made at the state level on this bill. And so, again, we would appreciate the opportunity to dig a little deeper into this and, have discussions at a work session where we figure out are there ways that we can protect those people without just kind of writing off and saying across the board for these criteria that those people are exempt from tax sale, because it could lead to further lack of payment for some of these folks and lower property tax revenue.
Thank you. It's great to see scenario one and know that if this works the way that it should, that impact will be very small, closer to $100,000. Thank you so much. Madam Chair, that's my last question for finance. Thank you so much.
More questions from the committee before we move to public testimony, and we do have some hands raised, and I'm just going to go down the list. And before we do that, I see Director Raymond of Finance. Yes.
Yes, I just want to clarify. Scenario one would have a revenue loss of approximately 100,000, but also there's going to be increased operating costs of at least 100,000 or more for the additional staff that will be required to administer the program for the reasons I stated before. Verification of income eligibility, age, type of disability, etc. So it's not just the loss of 100,000 on the revenue side, it's also the additional expense for operating. So I just wanted that to be on the record. Thank you.
Thank you for that clarification.
Yeah, can I just clarify one thing too? I just don't want our position to be misrepresented. You're
Yes.
exposing $13 million of property tax revenue today that could be lost. I think a scenario where you lose up to 13 is very unlikely. But I think the lost revenue will be much greater than 100,000. We're trying to show a range of like what we protect today versus what we're exposing. So today, to say we're going to be closer to the lower scenario, I don't think is accurate. I think we are putting millions of dollars of property tax revenue at risk. So I just want to make sure that that's clear from the comments.
Madam Chair.
Yes, Councilmember Costello.
Thank you, Madam Chair. Bob, what's your best guesstimate on where this ends up?
So we would need more time to try to fine tune these scenarios and to try to put like some kind of 50-50 scenario together of where we would end up. We don't have that today. We would need more time. This is a very, it's complicated. You're trying to model out behavior changes for new laws. You're trying to account for some of the unintended consequences. So, if we had a work session to come discuss this, we would try to fine tune this and have a little bit better, purely this is what we think the impact will be. But I think 13 is high because not all these people are just going to stop paying their bills. That's unrealistic. But I do think you're going to have a handful of people that are going to say, well, I don't need to pay, and that can afford to pay, and that will lead to some lost revenue.
How much time would you need, Bob?
I mean, I think we would need, at least an additional 2 to 3 weeks to kind of dive into the data a little bit more deeply.
Thank you, Madam Chair.
Okay, we'll now take public testimony from attendees, and then we'll go back to the sponsor to see if she would like to have a work session. I'm just going to go straight down the list, and if I pronounce your name wrong, please forgive me and correct me. We'll start with Nakia Namandi. I know I'm saying your name wrong.
Can you hear me?
Yes. Hi.
Hi. Yes, it's actually Nika Namdi. I am the director. I'm the director of community development for the Living Well Center for Social and Economic Vibrancy. I'm also the creator of Fight Blight Be More and a member of the tax sale working group. I have a number of points that I'd like to make, and I'm going to start with there has been significant evidence, one from a study from Indiana University and the University of California at Berkeley, that says Black and Latino homeowners are already paying a higher burden in tax assessment. That's number one. So when we start, the city is having all these dialogues about equity, but we have to start from the premise that many of the homeowners impacted by tax sale should not be in tax sale in the first place because their taxes should be more affordable to them in the second place. And that is happening because of clear racism that has been documented even by HUD's own 1974 study, which calls Baltimore out specifically for higher tax assessments in Black communities and lower tax assessments in white communities. So we have to start there if we're going to discuss equity. Second, if you look at the time period from February 2020 to June 2020, there were roughly 175 owner-occupied properties that went to tax sale foreclosure. So that is 175 homeowners, many of whom are going to meet the requirements of this bill, who are in danger of losing their homes because of the tax sale process as it is. The city, in a way, I've heard Director Raymond comment and the other individual from the finance department's comments about what could be lost. The way tax sale is currently done now, you are losing money in the front of the process because if the city simply had a payment plan that allowed people to pay their taxes monthly or quarterly, you would have many, many fewer people going to tax sale in the first place. On the back end, if the city owned its own or controlled its own collection process, instead of farming it out, the city could be collecting a fee. Hopefully it would be much smaller than the 12 to 18% it is now by doing deficiency spreads that would allow homeowners to pay the money that they owed along with the money that was currently due. All of these things will help to decrease, well, first of all, it will support and enable legacy homeowners to stay in their home, but it also would decrease the blight that we see in our community. I also have to say that we find that what the city is doing in terms of advocacy or education surrounding tax sale to be wholly inadequate. I hate to say it like this, I have 2 degrees. I still don't understand the process completely as it is. The tax sale as it is just confusing. And so we have elders in community, we have advocates. No one, a mailer isn't sufficient. So let me just say that. And I want to make sure I get to all of these other, the last point I'll make is, it was the folks on finance talked about these tax credits and why we should not be blanketly removing people using these exemptions because there are tax credits in place. I would ask them how many of those people eligible for the tax credits that would also prevent them from being in tax sale in the first place. How many of the eligible population is using those tax credits? I gather to say that the number is low because a lot of people in community don't understand the tax credits. They don't know that they even exist. They don't know how to apply for them. So there isn't a good job on the city being done about making sure that that folks are getting the information, that they understand the information. But at the end of the day, if the city is really about the business of equity, you have to start by reconciling the history of racial injustice. And the tax sale is predatory. Tax assessments have lacked equity and have caused many of our legacy homeowners, specifically those that are Black and Hispanic, to be taken advantage of. And so this bill, we do support this bill. There's some things that I think do need to be worked out, and there's some more specificity that is needed, but the spirit of the bill is correct. We need to protect our legacy homeowners, period.
Thank you for your testimony, and you have given some wonderful suggestions on and updates of things that the city needs to do to reach our vulnerable population. Thank you for your testimony. Next, we have Frank Boss
Yeah. Can you hear me?
Yes.
Okay. Good afternoon, Madam Chair, members of the committee. I'm Frank Boston III. I'm here today representing the Kenny Law Firm as well as the Maryland Tax Sale Participant Association. We certainly understand the rationale for the bill, but are very concerned about the unintended consequences that the bill in its current form presents. We look forward to working with the committee in this regard. I applaud the bill sponsor, Councilwoman McCray, for being sensitive to the issue of the senior citizens and trying to protect their homes. That said, there are some issues with this bill. As Councilman Stokes alluded to, the language would have to be cleaned up so as to prevent fraudulent situations. We can envision a case where, someone who's 40, 45 years old decides to put the property in their parents' name, create a life estate that reverts back to them, and then they're simply avoiding the taxes forever. And that's not the spirit of the bill. That's not what the bill is intended to do, but that could be an unintended consequence if the bill passes in its current forms. There's also the issue of properties that are subject to a mortgage already, where the taxes are collected, escrowed in advance, and then paid to the city. Under this bill, unless there's corrective language, the city could lose. That could interrupt the current process of the, coupling of the not only the mortgage payment and also the taxes. The previous lady who spoke had a great idea, a payment plan. Now I imagine that would add additional costs to the finance department, but if we're trying to help senior citizens, and we're probably talking about, and I'm sure we're talking about proud senior citizens who don't want to be in this position, who do want to pay their taxes, but somehow need a little help one way or another. And a payment plan is a fantastic idea. And I want to reiterate what Mr. Raymond has said. His department, obviously the city of Baltimore, because they have so many properties that are in this situation, have kind of led the charge at the state level to try to help as many people to correct the situation. We and my clients have been a part of all of those work groups and have been working towards collective reasoning to try to fix some of these. As Henry mentioned, and Mr. Raymond mentioned, just a few years ago, we all agreed to lower the cap from 18% to 12%, and to extend the time that senior citizens had to pay, as far, going from I'm not sure, but maybe 5 to 7 and 7 to 9 months. So there has been work done in this regard. Maybe there's more work to do, but we welcome the opportunity to be a part of the conversation and to sit at the table to come up with common sense legislation that is workable for all parties involved. And there's going to be others who speak after me. But I do want to make this clear for those who don't understand the tax sale process. It's a marriage, if you will. It is a marriage, and it took me a while to learn and appreciate and understand it. And I am an attorney, so I do understand the previous lady's comments about having 2 degrees and realizing it's complicated. But this committee should know that there is a marriage. When these tax sales come due and they haven't been paid to the city, the tax sale purchasers and tax sales attorneys come in, pick up the tab, write the city a check so that the city's budget can continue in its current form and not have a shortfall. That's the wedding. That's the marriage between our industry, our associations, and then the city of Baltimore. The city goes on, and we have, the duty, and the chosen duty to go out and collect the money on behalf of the city and remit the taxes and all the other costs to make the city whole. So with that, Madam Chair and sponsor of the bill, we thank you. Thank you for hearing me. Thank you for hearing us. We look forward to working with you.
Thank you. Thank you for your testimony. Bree Jones.
Hi, can you hear me?
Yes.
Sorry, is there a mute?
Yes, we can hear you.
Great, thank you. My name is Bree Jones. I'm the founder of Parity Homes, which is an equitable development company that looks to reinvest in distressed neighborhoods and create equity and wealth through homeownership. But at the core of our work is development without displacement. So we take the extra step to working with legacy residents to ensure that they're not displaced from various means, but in particular, we've been doing a lot of work around property tax and tax sale foreclosure. I would like to express my support for this bill, but also to add a little bit more context. So one of the points that was raised by the finance department is the issue of enforcement, that if you apply, this exemption, that getting the tax liabilities will not be enforced. My issue with that frame of thinking is that really the tax sale further enriches private investors at 12% per year for owner-occupied homes. And we should not be letting private investors be an enforcement tool for Baltimore's homeowners, particularly for our most vulnerable homeowners. Before I started Parity, I worked on Wall Street, and 12% annual return is an unheard of return for any financial instrument, and that should not be at the expense of our homeowners. Second is that interest and fees that homeowners accumulate when they're deficient on their property taxes can sometimes double or triple the original tax burden. And again, that should not be received by private investors. The argument that I heard from the finance department is that this only impacts very few people, but isn't just one family in one household that goes through this enough? For example, right now we're working with a very elderly couple in their 80s who just lost their home to tax sale. They owned it free and clear. They had a $3,000 tax burden, and now they're being evicted from their house, and we're scrambling to find them alternative living arrangements. The tax investor that acquired that property got a 4x return on that transaction. The other issue is that the homeowners actually did make an attempt to, pay their taxes, but in this process, because it's so convoluted and so complicated, when they made that payment to their taxes, it actually went first to the attorney fees, which were just about the same as their tax burden. And so they still lost their property. Now we're advocating to the tax sale attorney that facilitated that transaction that they give that money back. But because it's now a civil issue, we'd have to bring a civil lawsuit to court. And again, these vulnerable homeowners do not have additional fees to be, filing lawsuits against unscrupulous tax sale attorneys. And so I would also advocate in this bill that there's an analysis of bid premiums. So a bid premium is when a tax sale investor pays an extra and over amount of the assessed tax value or property value. That bid premium technically is supposed to be distributed to the original homeowner if the property is foreclosed on. I'm really curious how often that bid premium is actually paid out to the homeowners. And then I'd also like to have an analysis on when attorney fees are paid, but a property is still foreclosed on, are those attorney fees being given back to the homeowner again? I'd also like to advocate for a payment plan. As Nika emphasized earlier, payment plans have been adopted in cities like Philadelphia and they've been highly successful. I think that Baltimore can continue to set, a good example for what a strong city that values equity can look like. And the third is that in addition to this bill being applied to seniors, I'd actually advocate for it being extended to any low to moderate income household, because we recognize that it's not just seniors that are vulnerable, but it's, middle class folks as well, low to moderate income families. So perhaps, 80% of AMI can be used as the benchmark there. So those are my additions, some of the context of folks who are doing this work, but I'd like to thank Ms. McCrae for bringing this bill. Thank you.
Hi, this is Heidi Kenny. I think I'm next on the list.
Oh. Yes, go ahead. Sorry, I was in mute.
No problem. Again, this is Heidi Kenny. Good morning, Madam Chairwoman, and the honorable members of the committee and City Council. I'm an attorney that represents one of the largest investors in Baltimore City tax sale for the past 2 decades. And I've also served on the General Assembly's tax sale task force that met 2 years ago to address some of these issues. My client annually provides millions of dollars of necessary funds to the operations of Baltimore City and then hires me to do the collections, removing the city from this conflicted position. The tax sale process is routinely described as predatory, but the laws and the rules governing the tax sales and the foreclosure process are passed by the elected officials of the state to ensure that jurisdictions have the much needed revenue to operate. In any given year, my client's portfolio, 95% of the tax sale certificates that are purchased are redeemed in full. The remaining 5% represent either a write-off or are foreclosed, and the majority of those foreclosed properties are vacant and abandoned. Despite the role that I play in the tax sale foreclosures and the perception of my opposition to this bill, I feel that with over 18 years of experience in this field, I'm uniquely qualified to explain and assist the sponsors in the committee as to why this bill is not good for the overall economic impact for Baltimore City. However, I'm also best suited to provide insight into the current process that can be tweaked to aid the most vulnerable and susceptible elderly residents of Baltimore from losing their property for non-payment of taxes. The issue and the reason I'm testifying to oppose the bill is the amount of time between the introduction of this bill, the vote, and the implementation. More time is necessary to produce a bill with specific language that accomplishes the goals and intents of the bill without producing the legal loopholes and ambiguities that I see in this bill as currently enacted. For instance, there's no mechanism in place to monitor the changes of ownership status. For instance, if an elderly homeowner were to pass away and there's no current provisions to ensure that once that happens, the property then gets placed back on the tax rolls without a descendant coming forward and stating such. Currently, and in years past, I've worked directly with Director of Finance Henry Raymond, Mary Keenan of the Law Department, and Ed Scrivener in the Department of Finance office when I've identified these elderly residents that are in tax sale. I've spent countless hours assisting these residents through this process and navigating them through the departments of the city in order to reconcile their accounts, get payments properly applied, and reduce their taxes so these future issues do not arise. Most recently, I've worked with Councilman Pinkett in reducing a $20,000 water bill to $1,000 of an elderly property owner investment property where she resided and relied on the rental income from the other units for her income. In this instance, this particular bill would not have helped her. This is one of countless examples that I run into on an annual basis, and the city has worked endlessly with me when these issues arise. We all have a common goal, and that's to protect these residents and navigate them through the process. The tax sale process works in attaining the revenue that the jurisdictions require to operate, but the true issue is identifying these residents and providing them assistance to navigate through the bureaucracy. I support a work session to approve upon this bill and craft proper legislation to address these issues. Thank you for your time.
Odette Ramos?
Hi, good afternoon. Can you hear me?
Yes, good
Okay, great.
afternoon. Hi.
Hi, how are you? Madam Chair, members of the committee, thank you for your time today. My name is Odette Ramos. I'm the Democratic nominee for City Council in the 14th District and former Executive Director of the Community Development Network of Maryland. It is in that role that I played on the tax sale task force and also led the state's tax sale tax force. It's a tongue twister there. And so I wanted to have I thank you for the opportunity to testify in favor of this bill. We see too often, and other advocates will be testifying as well, where while the Department of Finance and others have said that many people do end up paying down the debt before the home is foreclosed on, the problem is that they're making decisions between paying for prescriptions, eating meals, and paying their taxes. And we need to make sure that we've got processes in place to make sure that they are not having to make those terrible decisions. I've actually run into several people in my whereabouts in the community where this is happening, and then also have run into people who have lost their homes to tax sale. So I offer that if you look at my written testimony, I have a chart here provided by other experts about how many owner-occupied properties actually went through tax sale this last time. In my district, it was 91, but then there are other districts where it's up to 172. And that is significant. So I think it's really important that we're protecting homeowners from this process. And my colleagues also talked about once a property goes through tax sale where there's the 12% interest a year plus fees, and that often those fees add up to double what the tax burden is. If we had payment plans and other ways of collecting, this wouldn't be such a predatory process. So I also want to acknowledge Delegate Kaiser, who put this legislation together to enable jurisdictions to do this from Montgomery County and her leadership, but also let you know that the state also authorized in other legislation that jurisdictions can offer payment plans. We do not need to go back to the state for that authorization. It is available to us, and we can do that. So I offer to the committee and to the sponsor and to Chairwoman to help with this legislation and move it forward. We have a lot of experts in the room, and it's a very, very important issue. I will also say that Baltimore is the first to think about implementing this part in the state, and that's an exciting opportunity. And also wanted to thank the committee for your previous support and the council support of the in-rem legislation that was passed that was related to tax sale. That is extremely important, and Baltimore was also the first to implement that. So again, thank you so much. I offer my time and expertise to the committee and to the sponsor to help move this forward, and I urge your support.
Thank you for your testimony as well. Ms. Mallory, I think, is the last person to testify.
Okay. Can you all hear me?
Yes.
So good afternoon, Madam Chair and members of the community. I'm Asia Mallory. I'm a consumer staff attorney for the Maryland Volunteer Lawyer Service. This past tax sale cycle, I counseled most of MVLS's tax sale clients. In my experience, tax sale affects the poorest homeowners in the most distressed neighborhoods. Most of my clients were low income, elderly, or disabled, or a combination of the three. They often have lived in their homes for decades and they survive on fixed incomes. My client, for confidentiality reasons, I will call her Wanda. Wanda is a homeowner, single mother of two who paid her taxes every year. Last year, Wanda was diagnosed with an aggressive stage 3 cancer that forced her into unemployment. While undergoing extensive chemotherapy and surviving on an income of $11,000 a year, Wanda now faced tax sale this year. Unable to receive the tax credit, Miss Wanda, she saved money, but being able to pay her property taxes before the deadline was impossible. The prospect of having to move and rent an apartment would push Wanda and her family further into poverty. Miss Wanda, I set Miss Wanda up with a reporter, and Miss Wanda did an interview. And through this interview about tax sale, a listener was able to pay her full property tax amount. However, many families don't receive that kind of generosity. Each year, tax sale results in the largest extraction of wealth from Baltimore's African American and Latino communities. Some families narrowly escape tax sale, but they're in a worse financial position afterwards, or others just vacate their homes. Even worse, most lien purchasers have no interest in the property itself. They are simply looking for the largest return possible on their investment. When families vacate their homes, they are leaving community associations, recreational centers, and neighborhood groups. Low-income, senior, and disabled homeowners are pushed further into poverty, and reliance on government programs increases. That's why MVLS is in support of this bill. Madam Chair and members of the committee, thank you for this opportunity to testify.
Thank you, Ms. Mallory. And looking at the list, I think she was the last one. So on this note, does anyone from the committee have any other statements or questions?
Yes, could I say something? This is Michael O'Leary from Housing.
Yes.
I agree with the previous speaker who said that outreach to seniors with mailed information is inadequate. I just want people to know that I do conduct in-person trainings at senior centers, and I train staff at HUBS, which is the program called Housing Upgrades to Benefit Seniors, and train staff at the health department's MAPS line and senior center directors, so they can provide some guidance and my contact information for those I don't reach. But I'm always open to ways to improve my effectiveness.
Thank you. Thank you for that added information. So we have, we've really received a lot of good information, not just from the attendees, but from the agencies as well. And we constantly hear as a committee that we would like to kind of move on and really think of this. Vice Chair McCray, any final words, or how would you like to move forward?
So first, Madam Chair, thank you, members of the committee. Thank you to our agencies who provided their reports and their feedback. Thank you so much. And last, to every member of the public who's provided public testimony. What I would like to do at this time is make a motion for a work session for this bill so we can continue this conversation.
Okay, as a committee, we're going to recess and not vote on this bill today. We're going to have a work session, and that work session is for September 17th at 10 a.m. as well. We do have hearings.
Madam Chair, what was that date? I'm sorry to interrupt, Madam Chair. What was that date and time again?
September 17th. And at 10 a.m., we do have a few scheduled bill hearings on that day. So we will include this work session after we get through those few other bills. And again, that date is September 17th. So the committee and I would like to thank you all for participating in this on this very important bill. And I see Councilman Stokes has his hand raised before we go into recess. Go ahead, Councilman Stokes.
I just want to thank, I think this is a great bill, but I want to reach out to Councilwoman Craig and say I really appreciate her doing a work session on this. It's a great bill. We just need to work through some other things, and I just want to let her know that I'll support the bill, and I think having a work session is great. So thank you.
Okay, and that
I'd like to
definitely.
second that. Yeah, excellent job by the councilwoman.
Okay, yeah, that seemed to be the, you know, what the people that were just a little bit against the bill. It was mainly they wanted more time to work together and try to iron through some of the differences. So we're going to honor that request. And again, the work session will take place on September 17th at after the 10 a.m. Formalized hearings. If there's no further questions or comments, we're now at recess. Thank you all for participating. Stay safe out there.